When it comes to markets, we're watching risk, whether we'll see that risk off continue this week. We've got Pete McGuire joining us now in the studio from XM. Peter, great to have your company on the program. Always a lot in commodities, and we love to focus on that with you, but I've got to start with the risk appetite on markets at the moment, because obviously we did see the rebound on Friday night in the United States, but the question here is dead cat bounce.
I think it's a dead cat bounce, but it'll be interesting how the week plays out. We've got data. The market is driven on sentiment. And when you think about what's happened as far as, if you look at gold, you look at equity markets and of course currencies over the last pre-COVID times, we've gone from that caution to panic to skepticism to greed and now euphoria. Now, when you run through that, there is very little news items that come out on a daily or weekly basis that shift the markets. So it just seems to be that euphoria has built over the last month and a half to 2 months. Maybe we're going to see some of that wind come out.
And when we look at those numbers, we break it down. You've made an interesting note in your report saying that basically the correlation between currencies and equities, they're getting much higher, and there really isn't that much difference in how they're being viewed by investors at the moment. Well,
exactly, and you've seen that US dollar, Daniel, take a very big move. It's, in the sense of what's happened since pre-COVID. Back at that 97 level, range bound between 96 and 101 for that US dollar index. So I think it'll hold between those sort of ranges unless you see something dramatic happen. But how do stock markets keep on moving forward? You've now got that second wave thought process coming into Beijing. What happens as far as US? It's going to be a torrid time. Maybe the time for gold, up 30% in a year.
I want to talk commodities more broadly, because as we see this risk off potentially take hold, so if we do start to see a correction, obviously using that word with some caution, but in markets, what do we see in commodities, particularly with oil?
Oil, I think it's going to hold at these sort of levels. How do you get higher growth if you're not consuming more? You know that you've got 10 million barrel day per cut till the end of the month from OPEC Plus, and then from July 1 it moves to 8 million barrels a day. So it's going to be hard from a compliance side. All of these producers have been hit very, very hard as far as revenue for their balance sheets. So if you've got compliance that's a mismatch, then I think that's going to cause more concern from a producer standpoint leading into that northern hemisphere summer. And I can't see that consumption is going to grow dramatically. We're going to see airlines back into the air to the level that we were in January and February. By, say, September, I think it's going to be fractured. So from a demand picture, I feel as though crude will stay at these levels, if not even crater a little bit from here.
Because we did see those numbers of COVID cases accelerate in Florida over the weekend. That may be some of the reason we're seeing quite a bit of weakness in the US futures and in oil, down about 2.5% out of session. So if this does continue to happen, surely that will also be a selling pressure on oil.
Absolutely. I mean, you put your mind back. These are uncharted waters, and I'm not here to spook anyone, but the second wave is always far worse than the first wave. Many medicos say that everyone gets it. It's quite that simple. So whilst you can look at locking down and so on, this takes years to work through. Yeah. So that's the great concern.
And look, none of us are pretending to be medical experts on the show, but if you do see a second wave, do you think they would reinitiate lockdowns? I mean, that could be disastrous.
Mnuchin said no. Right? Morrison said no. Morrison's coming out to the point. Look, this is where you've got a depression. Yeah. We think as far as job seeker, job keeper, just from domestically, what happens in September, October? What happens to real estate prices? What happens to commercial real estate? I'm in George Street this morning, Ingrid, coming to work, 7:30. I'm the only person on the tram. Now, this is George Street, Sydney. It's not 11:30 Sunday night, it's 7:30 to 8 o'clock Monday morning.
Certainly most offices aren't back yet. I mean, you've got to say at least the majors.
I work in WeWork. You know, the offices are bare. You walk around
They'll be there for a while, I imagine.
Do they come back?
Yeah.
So when you're thinking about all of those moving parts, this is a global phenomenon. And if you're talking second waves, we've also got an election year. So you take, in the sense of Trump, we're 150 days out from the election or less, probably about 140 now. So all of those inputs are going to really start to create more uncertainty to the market. It's going to be fought on one agenda. I think that's going to be China. So how does Trump manage that? It's going to be a fascinating time. The next 90 days are going to be incredible.
Speaking of, when you look at China, I guess Beijing's having a second wave at the moment. We're clearly seeing that. We don't know the data particularly, but it's looking that way. How does that impact us here at home? Because they are initiating strong lockdowns second time round, and they will continue to do strong lockdowns in China. They've made that very clear, quite different to how we've seen lockdowns around the rest of the world. That could impact us dearly here at home.
Absolutely, there's no doubt in that. There are so many components to those. If you look at the Wuhan issue and you look at, as far as crematoriums, all of those sort of things, I do a fair bit of reading. It's really going to be, I think, a pretty dire time over this Northern Hemisphere summer. So how do you get movement to the upside? How do you keep on getting those growth in equity markets while you've got that fear entering the market now with a second wave? I think it's going to be a very, very tricky time for investment, and that's why I say gold's the place to be.
But does that mean that iron could also be the place to be? Because ultimately, if China keep going with the infrastructure story, even if lockdowns persist, there'll be weakness in other asset classes, but iron, that's probably going to remain resilient.
Yeah, probably, and we're also fortunate, and to the sadness of Brazil, we understand they're really they've got some major concerns and it's catastrophic over there.
Yep.
So that really impacts as far as production and export from Vale. So we play favourably being in Australia. We've just got to hope and pray that Australia stays relatively safe, and only time will tell.
I guess with Australia, if we do come out better than, I guess, the rest of the globe in terms of the coronavirus pandemic specifically, which is looking that way if borders remain closed.
Yeah, it's a plus to be a continent.
Okay. Does that play out well for our economy though, or does it not? Because we still have close relations with the US, with China, with all these places that are having issues. Do you know what I mean? Does it impact us? Or do we come out sort of golden?
Well, I don't know whether we come out golden. We've got to get those people back employed.
Yep.
That's the great challenge
Yep.
that Morrison faces. 800,000 people. He looked a very worried man on Friday when I saw him on TV. He certainly didn't look Cronulla are winning and everything's great. He was a pretty worried sort of guy, and he's concerned, and they see the numbers. They're across it. They know what the key data points are, and they know retail sales, they know unemployment, they understand what's happening. The interest rate game is practically, there's no disparity between them. Switzerland's negative 0.75, the Fed's plus 2.5, or 0.25. Australia's just a fraction higher. So all of those more stimulus processes have to be, I think, negated. There's nothing there. It's just infrastructure. What can we do to get these people re-employed? And that's the whole agenda.
And we were discussing this before the show, Ingrid and I, saying that effectively, if markets do start to fall on accelerated risks in America, Australia will likely follow for the near term, but then it might become a bit of a health trade. Suddenly, people start evaluating which countries, which regions will come out of this stronger, and the money will flow in those directions.
Well, it could do. I mean, but you've got to get growth here with your equities. And those companies need to hit relatively good numbers moving forward. It just seems to be that whole euphoric phase has entered the market since really the start of April. And is it going to last into June and July? As I said, the next 90 days are going to be fascinating because Trump is on one agenda. That's to get re-elected. And it's going to be a Chinese election.
So with risk going where it's going and stimulus going where it's going, gold seems to be an easy trade.
Up 30% this year, Ingrid.
Can it go further though?
Of course it can. 30% in a year.
Yeah.
It's had a great run, 1730, 1750. Why can't it go higher? US dollar. If the fear enters the market and you get this raging across America as far as just coronavirus and all of those impacts, and then you've got that big picture as far as Beijing. What happens to the other cities? You're going to tell me that's the only city that's got it? So all of these factors need to be worked through the whole argument, and that creates fear and that creates sell-offs.
Especially if you look at, if that money's got to go into bonds, instead goes to gold, at least gold can't default. Whereas bonds, who knows what will happen.
Well, you'll only drop them further. It's a race absolutely to the bottom.
All right, Peter McGuire, we'll leave it there with you. Always a good chat. Thank you very much for joining us
Thank
here
you,
on the
Ingrid.
show.
Thank you, Daniel.